guys, welcome back to the Cash Flow Confidence Podcast. I'm Shelby Ashley, and I help business owners feel more confident about their cash flow. Today, I want to talk about something that is one of, if not the most confusing and frustrating things that business owners deal with, and that is, why does my profit not match what's in my bank account? I don't think I've met a single business owner who has not asked me that question at some point. And so if that's you and you're wondering, I have all this profit, where is it? It's not in my bank account. You're not alone. And on the contrary to that, you could even have a net loss on your income statement and have a ton of cash in the bank. And so on this episode, we're going to dive into why that is and how you can keep a better eye on things moving forward so that you're not, seeing one number on your profit and loss and seeing something entirely different in your bank account. So let's start off by talking about what profit actually is. Your profit is just your revenue minus all of your expenses. Truthfully, your profit exists on paper and that's it. All it is something that tells the IRS what you're going to owe that year in taxes. That's it. It exists on paper. Your profit does not pay your employees. Your profit does not buy new equipment. It's just a number that is on paper. If your business was a car, think of your profit as like your speedometer. So your profit kind of tells you how fast or slow you're going, right? You could even have a loss and be going in reverse. Think of your cash flow and your bank account balance as like your gas tank. Because if you don't have cash, you're not going anywhere. You're not even going to leave the driveway, right? And so that's how businesses that go on and on and on with a continual loss are able to actually stay in business. It's because they have cash injections from, various sources, most likely outside investors or owners, or just funneling money into the business. So let's talk about where your cash is actually going. So you've seen all this profit. Where did it go? There's actually 6 different things that tie up your cash that you're just not going to see on the profit and loss. The first of those is your unpaid invoices. So you've made the sale, you've earned the revenue. That's what shows up as revenue on your profit and loss statement, but it's not in your bank account until your customer has actually paid you. A lot of business owners, they'll go out making all these sales, especially like in the trades. You made all these sales and now nobody has paid you yet. Well, I see all this revenue. Where's the cash? It's probably sitting in those unpaid invoices. So if that's the situation, you need to really assess what your invoicing and collections process is and determine what your terms are. Are your terms due upon sale? Are they net 15, net 30? Whatever they are, if you've got unpaid invoices, you need a process in place in your business to track those down and collect your payment. The second area is the flip side of that, and that is bills that you have not paid yet. So when a bill gets recorded, you see that on your profit and loss statement, like that's your expense. But the cash piece is when you actually go to pay that bill. And so you want to make sure that you have good relationships with all of your suppliers. That way you get favorable terms like net 30, net 45 terms, and you can hang on to your cash until the invoice comes due. I had a client that as soon as a bill would come in, they would book it and pay it. And these were bills that they were from Grainger and Home Depot. So they were pretty long term, like net 30 at least. But as soon as they got the bill, they would pay it. And I told them, I was like, you're not paying it late if you pay it on day 29 or day 30. So hang on to your cash. There's no reason to pay a bill early when you don't have to. The third place that your cash might be going out is loan payments. So any loan payments do not show up on your profit and loss. The interest will show up on your profit and loss as interest expense, but the actual principal, like cash being sent to pay off the loan, does not show up on your profit and loss, okay? I had a client one time a couple years ago that was in a really bad spot because they had decided they had made a little bit more money that year than they were expecting, and they thought, okay, let's try and pay down this loan now that we're in a good cash spot. And so what they did was they just threw all this money at this loan they had outstanding, and somebody along their way had told them that in doing so, they were going to pay a lot less taxes. Well, you recall me saying at the beginning of this episode, you get taxed on your profitability. Loan payments do not affect your profitability. The interest does, but that's just pennies on the dollar compared to the actual principal payment. So this guy's thinking that all these principal payments he's making on this loan are going to decrease his profitability so that he'll owe fewer taxes, and they did not. So he was in kind of a bad spot. He didn't have any cash, and he still owed a bunch of taxes because he was still profitable. And so that's loan payments. The fourth place that might be eating up some of your cash is your inventory. So one thing that I always track with my clients that hold inventory is the days inventory outstanding. And this just means how many days is it taking you from the time that you bought the inventory to the time that you actually sell it? Because when you buy the inventory, that's a cash outflow. You're not going to see that cash again until the inventory is gone. So keeping track of your days inventory outstanding is really, really important. The fifth area that might be tying up your cash is equipment purchases. If you buy equipment, depending on a certain dollar amount, and I won't get into the nitty gritty, it's an IRS thing, it's either going to go on your balance sheet or your profit and loss. If you buy like office supplies and, office chairs and stuff, that goes on your profit and loss. But when you buy like big pieces of equipment or long-term furniture, things like that are more long-term, they don't show up on your profit and loss. You don't expense those things. And so that's another place where your cash might be getting tied up. And then the final area is your owner distributions. So if you have a company credit card and you go out and you just take your family to dinner one night and you put it on that credit card, that's a distribution. That is you taking money out of the business. And this is a very, very not talked about enough area. When I'm working with clients, we always keep an eye on this because you don't know if you don't know, right? You don't know what a distribution is if somebody's not telling you. I actually had a client, he owned a metal roofing company, him and his brother, and he had bought his brother out. So now it was just him. He had bought his brother out just before he started working with me. And he noticed that since buying his brother out, his profitability had gone way up, but his cash was still dwindling. And he was like, I just don't understand. Where's it going? I took a look and I saw that he had an automatic bank transfer set up to still send money to his brother as a distribution. And he had no idea. His bookkeeper didn't even catch it. And that's just crazy. So that's owner's distributions. You really need to keep an eye on that because there's a lot of things that you can spend using your business's money that you're not going to be able to expense. It's not going to show up on your profit and loss. So definitely keep an eye on your owner distributions. And so this is why it's so important to not just track your profitability. You need to track your cash flow as well. And I would even suggest, set up your bank accounts such that it makes it way easier to track. If you've ever read Profit First, he kind of goes into a good way of setting up your bank account so that you got a really good handle on things. It's been a while since I've read it, but you've got your tax account that you put a percentage into. You've got your operating checking account. You've got an account just for your pay. So read that book if you haven't. It's pretty good. Build a cash reserve so that when, you have these issues, you're not caught off guard. Okay, so definitely set up a cash reserve if you can. You need to be striving to do that. Review your outstanding invoices and make sure that people aren't, getting past due. Definitely start reviewing that. It needs to be reviewed weekly, not just at the end of the month. So the key takeaway here is that your profit is not always going to match your bank account because of the 6 things that I mentioned earlier. But there is a way, you can track it and take control of that. And so I want to know, which of these cash flow traps do you think you might be falling into? If you don't know, then you need to reach out to me so that we can look at it together. I try to keep this episode from getting too technical. I know I went over some accounting things. I try not to talk to you guys like an accountant. So hopefully I didn't confuse anybody. But let me know if you feel like you're not seeing what you should when it comes to your profitability and your bank account, and we can take a look. All right, that's all I have for you this week. See ya.